Welcome to the Chart of the Week. I developed this presentation to teach you my systematic approach to option trading. Each week, I'll go through part of my routine and I'll show you a promising trade idea. I'll post the new video on an unscheduled basis to keep you on your toes. You'll have to keep checking back to see if a new Chart of the Week has been posted. Let me start by introducing myself. My name is Pete Stolzers. As most of you know, my blog is an educational resource for my subscribers and prospective customers. I make my living by trading and providing research to day traders, hedge funds, option traders, and investors. Both of my websites are www.oneoption.com. However, my blog uses the number 1 and my research site spells the word 1 out. As I mentioned, I have a systematic approach to trading options. My edge is my ability to identify relative strength and weakness within the overall market. 75% of all stocks follow the market, and that's where all of my research starts. Each week you'll see two videos, Market Analysis and Chart of the Week. The videos are color-coded so that you know my bias before I start. The chart title and border will be red if I'm bearish, green if I'm bullish, and blue if I'm neutral. This same color coding applies to the Chart of the Week. Once the video starts, the title and border will fade so that the chart isn't obstructed. As you view the videos, you'll notice that I use line charts for this part of my analysis. I view the information in a small pop-up window so that I can see many charts in a short period of time. I call this process flipping. Let me demonstrate. Flipping is where my pattern recognition skills come in handy. Line charts keep everything light and easy to view. I don't use bar charts and candlesticks because they congest the information and the patterns are much more difficult to discern. You'll also notice that I start with a 1-week chart and I zoom out to a 1-year chart if everything continues to look good. I spend a great deal of time on market analysis, but the majority of my time is spent researching stocks. My edge is my ability to identify relative strength and weakness within the market. If by chance my market forecast is wrong, I'll minimize my losses by being in the right stock. On the other hand, when I'm on the right side of the market and I'm in the right stock, the profits come very quickly. As a professional trader, I needed to narrow my field of vision, so I developed over 80 proprietary searches. My program starts with over 25,000 stocks and it returns 300 candidates on average each day. I look for long-term trends and I have many metrics to help me measure price movement. Additionally, I look for high probability trading setups that have formed in the last few days. Options are a wasting asset and I don't want to park in a stock that's flatlining. Here's an example of an attractive candidate. In the 1-year chart, you can see how the stock has continued to move steadily higher. When I flip to the 1-week chart, you can see that it was relatively range bound and then we had a big breakout. So in this particular case, we have the short-term breakout and we know that on a long-term basis we like the stock. Each search is categorized so that I know what I'm looking for when I flip through charts. In my market analysis video, I'll start with a review of current conditions. We'll take a look at the 1-week chart, see what's been happening through the course of the week. Then we'll take a look at how the market is set up on a 1-month basis. And then we'll zoom out to a 1-year chart. And we'll take a look at how this current price movement fits into the overall picture. Once we've gotten our market bearings, I'll shift and I'll start to describe the search that isolated the stock that we'll be looking at as the chart of the week. As I conclude the market analysis video, I'll start flipping through some of the search results. I'll start my chart of the week video with a brief glimpse of the featured stock. But then we'll keep flipping through the rest of the results. At the end of the video, I'll review exactly why that stock made the cut and why it's featured as the chart of the week. I mentioned earlier that my searches are categorized. I look for long-term trends and tail-end patterns. This tail-end pattern is both a gap and a breakout. But first, let's take a look at the long-term pattern and let me tell you how these trades are classified. First of all, a stock is either bullish or bearish. This is rather intuitive, so I'm not going to spend a lot of time on it. This is a very broad trade categorization. Next, I take a look at whether or not the stock is a short-term or a long-term trade. I use the letter D to represent day or day trade. That means that it's a very short-term trade that might last 1 to 3 weeks, but it doesn't mean that I'm looking to be in and out during the same trading session. I use the letter W for a longer-term trade. These trades are in a longer-term trading pattern and they might last a month or possibly even 2 months. That doesn't mean that these longer-term trades don't also have some very short-term trading implications. The next broad category is reversal or continuation. In this example, we can see how the stock is trending higher, but it has a tendency to pull back. I'm looking for this pullback to be reversed. In a traditional sense, many people trade reversals. They would be looking for the stock to crumble and that type of opportunity. I don't like to short tops or pick tops. I would rather make sure that the long-term trend is in place. On a pullback, as long as those trend lines are in place, I am looking for the reversal off of this low. So I want to always make sure that the trend is my friend and the wind is at my back. For instance, this would not be a good reversal trade because there is no trend and the stock has pulled back way too far off of its high. I don't want to go out picking bottoms. I want to buy stocks that are in a nice long-term uptrend, have pulled back briefly. That pullback is giving me a good entry opportunity. That's what I would consider a reversal trade. It's important for me to make that distinction because I view reversals a little bit differently than most other analysts do. The final categorization is early or confirmed. Some people like to see trades while they're forming, but they realize that they're taking greater risk because the move may not have been legitimized by a close above a critical price level. So they want to get in early, and I do show those under the early designation. I use the letter E for that particular trading setup. Here we can see that the stock has broken out and it's starting to move higher. But we don't know if this rally up is going to hold or not until the next day. In this particular case, the trade would be confirmed because we had the gap and the breakout. It held into the close, and then the next day it actually held that particular price level. So the confirmed trade allows me to get a second chance to get into a trade that I might have taken a pass on the day before. Let's recap the different trade types. There's bullish or bearish, day or week, reversal, continuation, early, confirmed. All of these combinations yield 16 different classes. And again, remember, we're looking at the longer term price movement.